Good afternoon, everyone. It's after hours here, Thursday, May 25th, 2023. Let's now look under the hood now that everything's done for the day and all. Let's just start off looking at SPX, the S&P 500. It's still a little sideways since and below the peak of February. But from this little zone that I drew up back in mid-April, looks like it's starting to use it as some sort of support. So that's a good sign for the bulls, I would say. Would be great to get over today's high tomorrow. Would be really constructive and proof that there was accumulation, especially in like the semis, like Nvidia, which traded sideways a lot for most of the day. So if we could get some proof that there was some accumulation here and not distribution from larger funds to retail, that would be very helpful. That's how you increase exposure and increase conviction along with it to really be confident. Now let's look at the high beta stocks, SPHB, high beta stocks within the S&P 500. They were pretty much leading to start the year, and I was really adamant about the fact that high beta stocks cannot lead a new bull market higher. It would make it just too easy for market participants to just buy the most volatile names, and so that did end up coming to an end. As you could see, relative strength peaked when the market peaked back in the 2nd of February, and it has not recovered, even though this is the S&P 500, the purple line, even though that has clearly recovered, like we talked about, um, trading sideways now, looking to make a new high, possibly tomorrow. Not going to be the case for the high beta stocks, and you can see that the relative strength is still pretty low. And then if you look at, say, SPLV, low volatility stocks, that's even worse. So that's very questionable. I mean, you could make the case that it's the risk on, and the defensive stocks like what makes up most of the low volatility, say healthcare and energy or utilities. But that's just not the case right now. Is that they're just not holding up as strong. Or SPYV, that's the value. You can see that relative strength is also decreasing and then if you switch SPYV, SPYG, that's growth, and that relative strength is making a new high here. Price is also making a new high, kind of leading the market higher. So that's really the best case scenario for the bulls right now. And for the bears, um, for the doom and gloom people, or the people who think that the dollar will lose its reserve currency status, well, that's in a pretty strong uptrend right now. The last few weeks, basically since the 10th, made its low, its yearly low, over a month ago, April 14th here, and looks like it could be forming a double bottom. Generally, with a double bottom, you want the second low to be lower than the first low, like here, and then the buying opportunity will be the high point between those two low points, so around here, so around basically 105.90 or so. It would be surprising to see that tomorrow or anything, but generally when the dollar rallies, that is not very good for the market. I mean, you could see this area right here. The market goes down as the dollar goes up. You could see it throughout last year too. I mean, last year it was just rallying for, you know, really the entire year until, or at least the first 3 quarters. Yeah, and obviously the market had a very bad few first 3 quarters. So the dollar, that could be a major headwind uh, for for the market, as well as rates, which I could go into real quick. Right here, this is basically just treasury yields and the green, all different treasury yields, different durations, and then the green is XLF, the financial sector of the S&P 500. You can see that is just the green is at a serious support point right here. I mean, if it breaks lower than this tomorrow, that's another headwind potentially for the market, and it's tough for the indexes to go up with the banks going down. So there are potential headwinds looking at us right in the face, really. I mean, another one is RSP, equal weight S&P 500, different from the regular S&P 500, which is weighted by market cap. That's why the big FANG names like Apple, Amazon, Microsoft, or those big like six names make up a quarter or so of the index. But with RSP, they're all just point 0.2. Everyone's equal. And today, even though the market had a very big up day, S&P, RSP, excuse me, was basically flat. But that's also down for the last couple of days, um, down this week, in fact. And relative strength, if you look over here, that's also making a new low. Here, I'll go to a cleaner chart to not confuse anyone. Is the dollar. Uh, P, okay. Now you could just see. We'll go back and look. Max weeks. Normally, when RSP relative strength to the S&P, uh, is making a new low, that's not bullish for stocks or anything. It happened to start 2022. The market was at an all-time high. Everyone just thought that the show was going to go on, but RSP right here, showed that there was clearly weakness under the hood. The top five, six names, can't just keep dragging the market higher forever. Um, even before the COVID crash over here, I mean, it was already weakening, and it was kind of giving some signs of what was to come. That was a brutal few weeks. Um, but so that's another little warning sign, or just maybe just a reason not to be all in right now or anything. And all right, and another important thing. A lot of people love Bitcoin. Not necessarily one of those people, but you can clearly see a relationship between Bitcoin and the S&P 500. When the relative strength is going up, that's a pretty good time for the market. It's sort of the canary in the coal mine, and when relative strength decreases, it's not necessarily a good thing for the market. Right now, it is decreasing. You would think that after today everything would be up so much or whatever, but just a potential red flag there. And outside of Bitcoin, everyone else's favorite, gold, and we'll look at silver right after. But gold also hasn't had its relative strength increase since 2022. I mean, there's no alpha here right now. And the same goes for silver. Silver, a little more interesting, is at a downtrend from its 2021 peak. It's right at the what was resistance. Now, hopefully, it could turn for support for silver bulls. But again, that would be another headwind for equities, for the stock market. Um, Typically, when relative strength decreases, that's actually a good thing for the market. It's risk-on behavior, and when relative strength goes up, obviously that's risk off. But so we'll see this reaction tomorrow. I mean, it's down how many days? What, like 10 out of the last 13 days or so. Um, Probably more. I'm not counting right now, but yeah. So it's away from the accumulation zone, distribution zone, I guess is what it really was, since it gapped right below it. Not a good sign for silver. A good sign for bulls, but as you can see, there are a lot of mixed signals here right now. Rates are going up, uh, but silver and gold are going down. Oil is going down. We can look at that real quick too. Or B, this too has typically had a decent relationship with the market. It increases. That means that the economy's doing well, and the market's doing well. Now, relative strength is kind of teetering on breaking lower, it looks like, really. And so that's just another thing to look at. But if you look at commodities in general, DBC, since basically, the market bottomed back in October, uh, you know commodities have just gone down on the thoughts that inflation has peaked already. And you can clearly see this relationship that as commodities relative strength goes down, the market's gone up. And over here, when it was peaking, that's when the market was really having a tough time. In a year ago in June. Um, so there's a lot to take away, but not enough to really have strong conviction one way or another. At the end, protecting your capital is the most important thing. Making sure you sleep well at night. And that's all for today. Thank you very much for tuning in. Have a good night.